He joins us now with his outlook. Let's bring in BNY Investments chief economist and macro strategist, Vincent Reinhart. Vince, it's great to see you. Welcome back.
Thanks for having me.
So what are you expecting today?
Not much of anything in terms of the rate decision. They're not going to change rates when the world's so uncertain and the committee is divided. The news is going to be about how they couch that decision. I expect a short statement and a summary of economic projections that has an important omission. Kevin Warsh won't submit his rate forecast.
I think one of the questions will be what we get from the rest of the committee. And we are scheduled to get the dots, right? The projections. Last time around, they kept the easing bias in, if you call it that, but there were dissents around what to do with that. And since then, I guess you could say that inflation has gotten hotter.
Okay, so there's a couple points. One is this is a great opportunity for Kevin Warsh in which principle aligns well with practical outcomes. On principle, he doesn't like forward guidance. He doesn't think central bankers are good at forecasting, and it erodes their credibility to try to do so, and it also hurts the deliberations internally. So he'd like to get rid of forward guidance on principle. Well, if you do it at this meeting, you excise what three bank presidents dissented on last time. So he can get his group more likely to vote for the statement by taking out what he wants to take out. So that's the good news. What about inflation? What about the outlook? I think he's going to emphasize the price increases we've seen are about something that was backward looking. Increases in world oil prices because of Mideast tension. Going forward, we expect them to be going down because of the partial resolution of those tensions. In that environment, households and firms may not be all that worried about inflation. And so it's not as dire as currently priced into markets.
I guess the question that I was getting at is he's not the only decision maker. Yes, he's the chair, but you know, it's votes by committee. And will the committee, I don't know, lean toward rate hikes? Rate hikes maybe earlier than he wants to?
Sure. So first of all, he was a governor, so he understands that it's a group that makes the decision. And that's why his options at his first meeting are constrained. He can't turn the boat on his own. He's got to bring his colleagues along. What can he turn? He can turn the wording of the statement and whether or not he submits dots and the tenor of his press conference. Those are the things under his control. He can't force the issue by trying to get FOMC participants who legitimately are worried about inflation and do believe the next move might be to raise rates. He can't get them to change their position just because he wants to. He's got to convince them over time. And if events cut his way, i.e., we get some disinflation because of oil prices and productivity growth, then he may be more convincing later in the year. But that's a case to be determined then. No reason to foreshadow that by trying to put in forward guidance when you don't know what you're going to do.
Having not heard from him yet, so at this point, do you think there'll be any change in rates this year?
I think, unlike currently priced into the markets, it's more likely that there's a rate cut by the end of the year than a rate hike.